Welcome to Financial Garden Live, where we plant financial seeds every week so you can grow in our 6 areas of focus. Emotions and money, entrepreneurship, budgeting, banking, debt fundamentals, and investing. I'm your host, Tasha Danielle. Let's dig in. Hi, everybody. Welcome to Financial Guardian Live. I'm your host, Tasha Danielle, and I'm so happy because Rochell Monte is joining me again to talk about real estate. Say hello to the people.
Hey everybody.
No, so if you haven't seen previous Financial Guardian Lives with Rochelle, she was on talking about real estate investing with me. She's the reason why I got started in real estate investing. And she was also talking about like 10 steps to what you should do if you want to buy a home. So definitely go on our YouTube channel, Financial Garden, and look for those previous videos because they are really in depth. But Rochelle, I wanted Rochelle back on, not because she's my friend, but she's a real estate broker. She has nearly a decade of corporate accounting experience, so she knows all about the numbers. And she is very, very, very thorough in her research and helping people out. And her background, how we met, she was an intern at a company that we both worked for, and she just had drive and motivation behind her. She has a bachelor's and master's in accounting, so she knows her stuff. And she, like I said before, she's a real estate broker, and her company is Modern Luxe. So I'm going to be putting Rochelle's contact information on the screen throughout the live. So definitely share this live video right now. If you're watching, tag someone that you know is considering buying a home, interested in the home buying process, because Rochelle and I will be answering questions live today. And why not just get your question answered real time, and then you can follow up with her after the live is over. So did I miss anything, Rochelle?
I think you got it.
So I'm gonna do one thing before I get started, which is share my live on my personal page. I usually always do this before, but this is what happens when you do stuff live. Sometimes you don't always follow what you normally do. So while I'm doing that, I want to talk about the current market. Right, COVID has been going on since March, and you have been in the industry for a while now. What do you think? Well, how has COVID itself impacted your day to day as a real estate agent? Has there been any changes you've seen this year?
Absolutely. My husband and I were just doing some research actually the other day regarding like the days on market. So right now in the industry in Georgia, days on market in the last 5 years is lowest now, 16 days on market. And what that means is when a seller lists their home, within 16 days, they're under contract, right? A lot of times we're seeing homes go under contract in 1 day, but then you have those outliers that's going under contract 100 days, 60 days. So obviously the average is 16 days, which means homes are flying off the market. Again, that's our lowest point in the last 5 years based on the research that we've done, recently. Additionally, my day-to-day has definitely changed. I'm more busy now. However, instead of being out, I'm definitely writing more offers, not closing more deals though. Why? Because the inventory is so low. So yes, we're out here and we're writing the offers, but we're competing. Last year, this time, I wasn't competing for deals as much as I am now. So it's kind of hard to go out there and tell a buyer, who's been looking for a bargain, the house has been on the market for 100 days, but we still have to go in with our A game. And when I say our A game, when you hire or not even hire, but when you select a real estate agent that is knowledgeable and that does their research and have your interests at heart, 100%, then I want to do the research on that. I'm going to get market area knowledge. And tell you we should offer XYZ based on a comp. Now, I'm not going to just say, hey, they listed at 250, let's offer them 250. No, we're going to do our research, and I'm going to tell you if that's a fair or not price. But again, it's hard to have that conversation with buyers that, hey, we're not going in here on a negotiating tactic. If you want this house and you can't lose this house, we're going in with our A game. Again, as an agent, I am here for you in your best interest, and I'm always going to fight for you and negotiate, things such as home warranties and stuff like that into your deal. But we have to be aggressive in this market as buyers now. So yes, my day-to-day has definitely changed. Like I said, writing a lot more offers, but those offers are not turning into, contracts as they were in prior years. So COVID has definitely impacted the market. Sellers, it is a seller's market from the standpoint of sales price. They can ask for more. Why? Because the supply is low, and the demand is there. Why is the demand there? Because interest rates are low. So now we have interest rates at 3%. We have buyers excited, ready to purchase a home. Again, at a 3% rate, your payment usually looks pretty good, just in general, right? But at the same time, go ahead.
Yeah, I was gonna say, I realized that when I was talking to you about the market, I didn't say where you are based. So what area, what part of the U.S. are you in? What areas do you serve?
I'm in Atlanta, Georgia, but I find that I do talk to colleagues all over the world, right? Or all over the country. I have people that reach out, and I hope you guys will reach out to me if you have any real estate questions. If you are looking to purchase or you're looking to sell, give me a call first. And then I can put you in contact with an agent. And so with that being said, I reach out to a lot of agents around the U.S. And what I'm finding is that this is not, specific to Atlanta by any means.
Okay, that's where I was going, because I was going to say, is it just in Atlanta, or is it everywhere?
No, not at all. Even in, the cities and areas of Atlanta that you didn't see, homes moving as quickly, now you're seeing in those areas, things are even picking up and moving faster. So no, it's not specific to the Atlanta market by any means. But again, like I said, right now I'm seeing that it's a seller's market from a pricing perspective, and they can sell their homes at a high number. But it's also a good time for buyers to get in the market and to purchase real estate, because interest rates are really low and we don't know what's going to happen.
So again, if you're watching this, tag somebody who is interested in buying a house. Leave us any questions or comments so we can answer them while we're going through this. So, okay, so you mentioned that it's a seller's market, and a lot of it has to do with the interest rates being so low. Mm-hmm. The lowest, I don't know since when, but it's just really low right now. So a lot of people are putting their house on the market, and like you said, it's just not, people are putting their house on the market, but it's not a whole lot of inventory out there. Mm-hmm. So,
go
ahead.
Well, it's not a lot of inventory, because although people are putting their home, there's a lot of people putting their homes on the market. There's a lot of buyers in the market too, right? That's but the homes are not lasting as long, right? So those sellers' homes are disappearing quicker. There's still a lot of buyers in the market.
Okay, so this is something that I have heard in the past, when the market started picking up, I want to say around 2018, like that fall time frame in Detroit. I knew a few people that were buying a house. I bought my real estate property during that time, but I wasn't looking for like my forever home. But people at that time were in the market for their forever home and were going above the asking and appraisal price. Do you think it's wise to go above the appraisal price when you're in the market and you're like, I'm tired of losing on these homes, I'm just gonna go above the appraisal price?
No. I mean, I'm a finance person. You're a finance person. We do disagree on a few things, which I like to point out and I like to tell people, because there is no one way to do it, guys.
Right.
I'm sure you guys heard of Dave Ramsey. Great guy, right? Great. I mean, Tasha probably used parts of that in what you're doing, right? But there is no one way to do it. So right. I just keep highlighting that when I can. However, when it comes to purchasing a house, buying a house and being upside down, I don't think that's a smart idea by any means. Unless, of course, we know something about, like, they're going to build a stadium next door to the house, and then your house is going to inflate by a crazy amount. No, but to go into a property, buying it upside down, if the appraiser says the home isn't worth it, and the appraiser is appraising the area and everything else in it, right? So if the appraiser says that it's not worth it, I suggest you don't put your liquid cash into that property, because again, if it's above the appraisal amount, you have to bring that liquid cash to the closing. So if it's a $280,000 loan, but it's $300,000 sales price, you got to bring that 20K difference to the table because
Right.
you feel that it's worth $300,000
plus your normal closing costs. So I know people who did that and they had it, and I was just like, I don't know why you would, like you said, start out you upside down in your house. But some people were just like, they're tired of losing out on homes, and they really just wanted to buy, and they were looking in a specific area for a specific school district. So I was just like, I can't relate. So I figured I would ask that question. And I want to go back to interest rates. So you said like we were talking about interest rates being low. I had a viewer reach out from one of the earlier videos that we had about comparing a conventional mortgage to a FHA mortgage. And I was like, what's the scenario? What's the difference? And the conventional had a higher interest rate. I want to say like 1.5%, 1.25% more than FHA. But the viewer was like stuck on PMI. And I'm like, okay, well, what's the difference in PMI? And that's a private mortgage insurance. If you're not familiar with it, which is basically saying if you're not putting down 20% of the home value. So if you see a home for $100,000, if you're not putting down $20,000 on a house at closing, bringing that to the table, you're going to have to pay a small amount additional in your monthly payments, right? So they were fixated on the PMI, and I'm like, okay, well, what's the difference in the PMI between the two, the conventional and the FHA, and then also like other factors that I was asking as far as like, can you actually compare everything broken out? Like, is there other things that are in this breakout between the two? So she was saying like she would send me the information to look over, and I'm like, from what she sent, and from my understanding, she had wanted to stay at this whatever house that she determined to buy. She was planning on staying there, from my understanding. But I'm like, well, just because you got PMI, because back up. If you get an FHA loan, the PMI is there for the life of the loan. And I'm like, just because you get PMI doesn't mean once you get 20% equity, then you can't refinance. And they were like, well, I don't want to put that on the table. Let's just keep everything. If I'm going to stay in this house or whatever, this is why I want to go this way. I'm like, well, all things being considered equal, like you're going to bring more money cash to the table for conventional, but I can't see the breakout on PMI. So you might want to go conventional, right? Even though the interest rate was higher, because the breakouts were weird. Like the breakouts, I couldn't see everything in there. And I told her that. I'm like, but the difference in monthly payments it was only like $80 different. So I was like, I'm not 100% sure. So I pointed it over to you, Rochell, about that. So when someone's considering comparing mortgages, what type of advice do you give? Maybe you can use this example.
Yeah, no. And I was actually excited that you sent me an example. So many times that I have this conversation and I'm left to say, well, if the situation was X, Y, and Z. So you actually gave me, a FHA FHA approval, as well as a fee sheet, meaning showing all the fees, the closing costs, the down payment, the monthly payment, and things like that. Like I said, guys, when you go shop with a lender, what you want to see is the fee sheet. If they don't understand, because some
what sheet?
Fee sheet. F-E-E.
Okay, fee sheet. Okay.
So now listen. So to that point, I was going to say some lenders are going to. It's not what it's called there. So if you say fee sheet, they're going to act crazy because they don't want to show you It's so weird. It depends on who you're working with. Like I said, you really want to find a good lender. You want to find someone that when you ask them, hey, I want to see the details of the number, that they provide you with a document and you don't have to have this technical term in order for them to do so. Again, if you're working with a good real estate agent, these are some questions maybe that can help you, ask the lender for. But nonetheless, I always tell my clients to ask for a fee sheet. What you provided me for, you provided me one for FHA as well as one for conventional. So I was able to compare the two. The only thing that I would say, and so when people are shopping around, I would say one, shop lenders, meaning don't get a pre-approval from one, get a pre-approval from 3 to 5 in a quick period of time.
3 to 5 lenders, my credit score gonna go down.
Okay, so you're shopping around for a rate. What happens if the fourth lender has the lower rate or has the overall better package for you as a consumer? Now you're out here in the market to purchase one of the largest purchases of a lifetime, generally a home. Is that right? You're out here in the market. You don't think it's fair to shop around and get the best rate?
Yes, I do. I'm messing with you because I tell people that too. I
Of
tell people
course.
that too. And they say, well, my credit score is going to go down and I don't want to do that. I'm like, okay, you can't just do one or two.
So
And also, too, it's like if you do it within 45 days, it's not a huge impact to your score, correct?
I say 7. So
Okay.
there is literature on various amounts of days. I think Credit Karma says 14. You say 45 because I'm sure you've read that somewhere. I've heard 30. I say 7. Get it out the way. I'm the type of person, I was just shopping around for a mortgage. What did I do? I called 5 lenders in one day. Am I going to be able to talk to all of the lenders? Are they going to all put my credit on the same day? Possibly, possibly not. But within a week, I've done my job with lending. I know I got multiple lenders give me a call. Hey, do you want to move forward? Hey, this is our rate. Hey, here, you know. So yes, no, I definitely don't worry about your credit score. The impact to the credit score is in your inquiry section. The inquiry section is a low impact to your credit, and generally, this multiple credit pools, hard inquiries, will hit onesie twosie points. So again, you've built this credit up all this time. You got up to your 700, 720, or even 680, and now you're scared to get your credit pulled. What were we building this credit for? Right? Not to be able to go out as an educated consumer and shop around for the best rate. So that's what the credit score that you build is for, to shop around. So I definitely recommend you get your credit pulled. Yes, by 3 to 5 lenders.
Okay.
And I'm sorry. Oh, and
No,
then
so we're
when
talking
you're
about
shopping.
Yeah, we're talking about, if you're just tuning in, we're talking about FHA versus conventional. I said Rochelle, a comparison breakout between the two loans. And so she's walking through like how she was able to determine what was the best option for the home buyer.
Okay. So first things first, when she sent me the 2 documents, I did do the comparison. However, I would say as a consumer, when you do get a pre-approval from, when I said 5 lenders, when you're shopping lender A, they give you a conventional. They're going to give you a conventional. Why? Because they think that that's the best thing for you. But you don't want to know what they think is the best thing for you. You want to compare apples to apples. You want to make a decision what's best for you, right? But based on the information that they're able to provide you. So what I mean is, lender A, hi, can you give me a pre-approval if I were to go the conventional route or if I were to go the FHA route? Some of the major differences, obviously, with FHA is it's a 3.5. It's a government loan. It's a 3.5% down payment loan. Conventional usually is a 5% down payment loan. Huge difference. And that's the difference is if you're bringing $3,500 to the table on a $100,000 house, or $5,000 down to the table for the down payment piece only.
So that's the one part of it, right? So you're looking at the down payment piece. So that's the biggest thing if you're looking at FHA conventional, the interest rate. What about the PMI? Because this person was like stuck on PMI. And I was like that too when I was looking at my house. I don't want an FHA because the PMI is going to be there forever. So when you look at the conventional PMI versus the FHA, what did you find out?
So first and foremost, I compared what I had, apples to apples, from that standpoint, right? So the reason I say it wasn't apples to apples is because the FHA product that you sent me was from one bank, and then the conventional was from another bank. So when I say they're not apples to apples, I don't know what bank ABC would offer, percentage for both. What we had was FHA at a 3.75%, and we had the conventional at, I think, at a 4.25%.
Yeah.
I will say this. Generally speaking, I find that the conventional rate is higher. Just overall, even when I was in the market shopping, my FHA rate, interest rate that was offered to me was slightly lower than the conventional rate. So that's not shocking to me. But again, there are other factors to consider, right?
Okay.
The credit score is really, really important when they're factoring the PMI. Remember, we talked about, and maybe we should back up really quick. So a monthly payment includes your principal and interest,
Okay.
your taxes, your HOA, if there's any, your PMI or private mortgage insurance. Let's call this the tax for not putting 20% down on your home. And then your insurance, your monthly insurance. So the taxes is going to be the same regardless. The insurance is going to be the same regardless, because whatever insurance company is insuring the same amount of home, right? Your HOA, same regardless. What we're looking at is, what is my PMI? Because I'm putting down less than 20%, so I got to make, essentially it's an insurance payment to cover my loan if I were to default. So I'm helping the bank insure me just in case I mess up. So that's an important figure to look at. And then the principal and interest. So when we're looking at the interest rate, 3.75 versus 4.25, the principal and interest on the FHA is going to be lower. Why? Because the interest rate was a lot lower. So comparing those two lines, apples to apples, the interest rate is better there. So now we get down to that PMI piece. Now, this is a variable that a lot of people don't take into consideration. They hear the interest rate, and that's all that matters. PMI is a very, very important figure, and is driven by credit on a conventional loan, meaning if you have great credit, the conventional route may be better for you. If you have a 620 credit, then the FHA route may be better. Why? Because FHA PMI rate does not calculate based on credit. It's a fixed rate. Whereas the conventional, if you got good credit, the rate's lower. If you got bad credit, the rate goes up. And that payment could be really, really, a real difference. So when I did go over all her information, all her numbers, it looked like the FHA was definitely the route to go. She gets to bring less to closing from a down payment perspective, so more cash in her pocket. And again, I know you talked about the fact that she wouldn't want to refinance out because the difference in the conventional and the FHA long term is on an FHA loan, like I said, that PMI never goes away. New law, I think 2018, now PMI sticks with you. It used to fall off after 10 years, not even at 20%, but after 10 years, you were at 20%, falls off. That's no longer the case. However, I would never allow that to scare me. Personally, I purchased a home. I had PMI. I refinanced out when I made it to 20% equity. It's just the cost of doing business. Now that PMI payment, and I'll go ahead and share, like my PMI payment was $330. That $330 when I refinanced went away in total. Okay. So I'm saving $300 over the course of 12 months a year, right? So it's worth the refinance, even if I had to pay, $5,000 or $6,000 in closing costs, right? It's worth it long term to get rid of that hefty payment, because that payment didn't change. It's $300 every month for the life of the loan.
Now, so I liked the way you broke that down, and the reason I sent it to you is because obviously you do this on a daily, and sometimes mortgage bankers don't want to break down scenarios because they're trying to make a sale. So I was like, let me just have you look at it. So I do like that perspective that you provided, especially when you're talking about like the PMI factor. And that's what you had talked to me about. Like, remember PMIs based on credit. So I was just asking this person different questions. So if you have any questions, like from what we're talking about, please drop them in so we can answer them for you. And make sure you're tagging anybody who is interested in buying a home in this live as well. So, all right. So now we talked about PMI, conventional versus FHA. This is something that I said that we were going to talk about today. I want to shift gears a little bit and talk about being a landlord. We're going to come back to being a homeowner, first-time home buyer, or just maybe looking to change it up right now. You are a landlord right now during COVID, and what has your experience been? Have your tenants been paying their rent?
All my tenants are paying. I have not. We have not missed a beat. But I would attribute that to my property management company, and I guess that's me. I property manage. I property manage for myself.
You want to pat yourself on the back, like I am my property management company.
Well, no, honestly, property management is a tough business, man. It's hard to find a good property manager. it's hard to be a good property manager, I guess. I don't know. So I property manage for myself. So it's my property. I'm vested. I care. I was having a conversation with one potential investor, and that topic came up, and it was like, well, and I mentioned, well, I actually do my due diligence and I vet my people. I don't allow you to send me a check stub and tell me you work here. I call and I verify that check stub, not with your supervisor who got it at Gmail, but with the HR department at your company, right? No, so like everything needs to be legit. It needs to be a fax line, or it needs to be at HR, at this company. There's ways to really vet clients, you know what I'm saying? There and there's some people will just put themselves out in the beginning. I had people come to my house and say, well, can I use unemployment? And I said, no, it has to be earned income. They said, well, how you gonna know? Well, so again, if you just ask questions and do the process properly, you won't end up with the type of people, that don't pay rent. That, at the character that I have, the character that Tasha has, I think, a place to stay is probably the number one thing that we're going to pay for. At the end of the month, you got to eat and you need somewhere to live. So a responsible person are going to pay for those things. And that's what I do. I vet for responsible people. Obviously, jobs can be impacted, and there can be scenarios where, people just fall on hard times. I have not had that scenario. And so I've been fortunate there, but I also, again, have responsible people who pay their rent.
Okay, so if I was interested in buying my first rental property, like, should I do it during this time because of all of the tenant protection that renters have right now with COVID? But I don't know, like, what it's like in Georgia. Maybe you can speak to that. But would you buy a rental property right now?
So I definitely recommend that you do some research. At biggerpockets.com. That's a little plug for a company that I really like and I stand by because they've helped me so much. And it's just really a community of people really trying to help people. So I would say do your research. They have articles out there about states that are more tenant friendly versus landlord friendly. So yes, if you are in a landlord friendly state, I suggest for sure. I am still in the market. I am still looking for active real estate deals that to put in my portfolio. So yes, I definitely recommend go out there still try to purchase something from an investment standpoint. Again, do your research, do your due diligence, research such as, like I said, the type of state that you're in. And there's nothing wrong with, like Tasha called me just last week, there's nothing wrong with being in Michigan. Oh, and this is an example. Say, for instance, Michigan's friendly to her tenants, but Georgia's not. Well, Tasha can use her money and invest in Georgia too. So don't be afraid to invest. It doesn't have to be local.
That's a good point.
Yes. So just link yourself up with a good real estate agent, in that local community that you want to invest in, and the rest is history. But again, I definitely don't say take a pause on real estate by any means, especially with.
Now, I was still putting your information up because I know you keep saying call me or text me or whatever. Text her if you have any questions, if you don't want to ask them on live or if you're watching the replay, because a few viewers
going off.
I can't with you right now. Because a few viewers have reached out to her and they don't live in Georgia and they bought their home. So it's like she's a wealth of knowledge and she will walk you through that process, especially if you're a first-time home buyer. So I'm gonna keep her number up on the screen for a minute. So that's a good point. You don't have to buy a house in your neighborhood. I know you're trying to get me to come down to Atlanta right now, look at some properties. So we gonna see. I'm trying to decide if I want to travel during COVID. But anyway, back to the topic of real estate. As far as should I invest in rental property? Like Rochell said, consider out of state if you're not a landlord friendly state, and actually look into what the tenant rights are for your state for tenants. So I'm in different real estate groups. And I've been reading that some landlords are requiring more upfront payments of rent. I don't know if that's legal or not, but that's something that you consider.
It depends.
You can't consider. Yeah, so that's something too. So I'm like, don't feel like I shouldn't buy right now. If you're interested in being an investor in real estate don't feel like right now I should hold off or whatever and wait till the market crashes. So that's another thing. What do you think? Obviously, we don't know. Even the economists don't know. You can watch one news station, the economist saying one thing, and another one saying another, and they just wait 5 years later so they can say they was right. So we are all pretty much guessing at this point. But what do you think? Do you think the market is going to drop? The real estate market is going to crash specifically anytime in the next 12 months?
I don't know. We have a whole whole election getting ready to take place in what, like 14 days or something like that. So
no, it's coming up.
Yeah, I can't say that. Prices can continue to inflate. Interest rates can go up again. We just do not know. We are at the turn of an election, a big election, and depending on the outcome, we don't know what to expect. Honestly, I don't.
Yeah, and I would just say this too. Like, if you know the numbers, I know Rochell mentioned bigger pockets. It's blacker pockets that offer information as well. I can't think. Kendra Barnes, she has really good real estate tips. Erica Classy Climb on YouTube does great job walking through different real estate scenarios. So definitely check out other people too to get different perspectives. But if you know your numbers and you understand how real estate investing works and what you should look for, you can find a deal in any market. So don't let that deter you. All right, let's jump back to home, like being a home buyer. So Tanya's letting you know, thank you, because she had a friend who watched this and like ended up reaching out to you to work and buy her home in Michigan. And Rochelle is in Atlanta. So real quick, I know when you were on before I know when you were on before you mentioned like the dream buyer or whatever. It's a down payment assistance program in Atlanta. There's something like that here in Michigan. Have you seen any funding go away from that? Are those opportunities still around?
Yes, those opportunities are still around. I'm glad you brought that up because I did want to tell people, if you are looking to purchase, definitely I know some down payment assistance programs in Atlanta, one of which that does not consider household income, which means, for example, if you're married and you want to purchase as an individual, and not put your spouse on the loan. I can go down a rabbit hole about that because there's reasons to do that, right? You want to, if you wanted to do that and your spouse, for example, makes $90,000, but together you guys make $200K. Well, at the $90,000, they're not considering the household income. They're only going to consider that borrower's income and the income limit on one of the programs that I know. I won't say it because you guys can give me a call and we'll talk about it.
Let me drop your number again.
Yes. So again, if you're in the Georgia market, there is a down payment assistance program, again, that I'm aware of. Specific counties where you can purchase a home, again, up to $400,000. You can make up to $111,000 individually. And I think it's 4% down payment assistance. So if you're going to FHA route, FHA requires 3.5% down payment. They're going to give you a grant for 4%. So it sounds like we're just left with closing costs. And in this market, it's good to not have to need closing costs from the seller. If we could bring them ourselves, we're more aggressive offer. So keep that in mind. Give me a call again if you're looking to purchase. A lot of times, high income earners cannot benefit from down payment assistance programs. I know a program. If you're making up to $111,000, we can still potentially get you 4% down payment assistance. So give me a call.
Okay, and I just want to say thank you, DeMarcus, for tuning in. I saw your comment earlier. I want to hear about your real estate property endeavors as we're going along through here. So I'm gonna get ready to close out soon. So if you have any questions, definitely drop them in a comment section. But if I were looking to buy this home, like I'm watching you tell me about buying a home, the market is tough and the inventory, like people are putting offers in and not getting them. And I'm like, you know what? I still want to try. I'd rather be a homeowner. Like that was one of my goals. So even in COVID, I want to do this. What are I would say the first three things they should do today if they're thinking about buying a home and they don't want to let COVID hold them back?
Okay. The first and foremost, contact me, Rochell, 678-568-6046. I can first, just kind of have a consultation with you almost, kind of tell you what things to look for. Just like I'm willing to do on these lives, I'm also kind of willing to, at least give you some information and kind of put you in contact with a good agent in your market, if it's not Georgia. So first and foremost, contact me. Secondly, from that, you want to contact a lender. Hopefully it's a lender that myself or that one of the agents that I put you in contact with has recommended, that they've had successes with. Lenders can be a nightmare. Namely, big banks can be a nightmare to work with because they're in the business of something else, and it's not necessarily mortgages, right? And number 3, do your due diligence. Start reading. Start, asking Google, asking YouTube questions. People who purchased before, people who just purchased, people who just sold. Really dig in and do your due diligence as a consumer. You want to be educated. And like I said, most importantly, just do your research. So read a lot. Contact me. We're going to put you in contact with a lender, and we expect that you're going to do your research. Again, you contact me. I will put, give you information as it relates to, how to protect yourself when purchasing a home and things like that. But ultimately, those are the 3 things you want to start, where you want to start.
Okay, so those are very big. And I want to say this too, that you may feel like, okay, I want my credit score to be at a certain amount because I read online. I can get approved for this by putting in my income. There's so many calculators out there, and you're guessing. But if you contact the lender, you can know what you really can get. You can get a pre-approval and see like what can you really buy. And so the first step is, contacting Rochell or contacting a lender, either or, whatever. I would recommend talking to her if you haven't bought a house in a long time. Maybe you already are a homeowner. This is your second home, because the viewer that reached out to you, that wasn't her first time buying a home. It had been years since she went through the home buying process. So it doesn't matter. It's not like she's just saying if you're a first time home buyer. Right. But if you're like, okay, well, no, I have a real estate person here. I already, in my state, and I want to work with them. Okay, great. The next thing is you should be getting pre-approved. You shouldn't be guessing on what you can afford. And exactly. I mean, obviously, if you're working with a real estate professional a lot, they shouldn't really be showing you homes without the pre-approval, but you could just know somebody that you want to eventually work with, right? You still need to figure out what your numbers really are. Do you recommend if someone gets pre-approved for a certain amount that they should just really max out that amount? Like, what are some rules of thumbs to figure out, like, should I got approved for $250,000? Should I go all in? Do you have any rule of thumb about that?
My rule of thumb is comfortability. So if you are currently paying $1,200 for rent, you get a pre-approval for, $200,000. And based on all the numbers, it says your mortgage is going to be $1,300 or, $1,400 a month. Can you realistically afford the additional $200? Is it going to be comfortable? Is it going to be uncomfortable? Are you going to be living check to check? Again, personal decision, right? That needs to be made, but it's about monthly comfortability. So, what you bring in every month, what you currently pay for rent. So that kind of gives you an idea of what room you have. Some instances your mortgage may be lower than your rent. So yeah, I go all in because they said this mortgage payment is only going to be X. So yeah, but if not, if there's some gap to be made up, can you realistically afford that gap? So that's the real rule of thumb: comfortability.
Yeah, I say that to people too when they ask me, because I'm like, I think you should stop thinking about just, okay, is the monthly payments the same between renting and buying? It's like so many other things. You're not cutting your grass where you rent, right? Are you gonna do that? Are you gonna hire somebody to do it? Are you gonna buy a lawnmower to do it? Landscape and maintenance, just general maintenance around the house that you haven't considered. Like, so don't be house poor. Don't be
all factors do need to be considered. Correct. And I didn't say that, right? I say comparing rent to rent, but yes, you have to compare all the other factors. But in some instances, you were paying parking at your apartment, and now parking goes away. So again, you have to consider all factors.
No, and then so just so you guys know the background, I am a little bit more conservative when it comes to money, and Rochelle is a little bit not. So we do have different differing opinions, which is why I like to have you on, because I'm always like, you should do this and you should consider this. Rochelle's like, that's cool, but you don't gotta be that, that stringent on it. So I do I do like that we got those different views.
Mm-hmm.
But anything else that I haven't covered that you want to share with viewers as it relates to the current real estate market?
You know what? I want to share something with viewers about FHA versus conventional, actually.
Okay.
And I just thought about it because, as you said, you and I are different. Tasha paid off $80,000 worth of debt before she was 30 years old. Student debt. She went to college. She got real smart, put her in debt, and then she got even smarter and paid it all off. So some people, right, go all in, pay all their debt, and then some of us make a payment. So again, if you still have debt sitting around, student loans sitting around on your credit, FHA will make you consider more of that in your DTI than a conventional. So again, some people are forced to go the conventional route just from that student loan perspective. Again, I guess it's hard to kind of break apart, but again, that's when you're thinking about an FHA loan, one of the major questions is how will your student loan payment be calculated in your DTI? So again,
what is DTI?
DTI is your debt to income ratio.
Okay.
And that's the factor that they use to tell you how much home you can afford, right? So if your debt is, if you pay $1,000 for your car note because you live in an apartment, a lot of your income is already ate up by that car payment. But nonetheless, like I said, if you got student loans, I do find a lot of times that it is hard or harder for people to qualify for the FHA with high student loan balance, not even payment, but balance. That's something definitely to keep in mind.
No, I'm glad you shared that because I didn't really know that or think about that. So a lot of people,
you don't have student loan. You don't have that.
So you're right. I'm like, when I bought my house, I didn't have any debt. So this house ended up being my debt. So I agree with you there. So that's something also to consider. I want to also point out too, like, just don't be discouraged in this time. If you're watching this and you're like, okay, I do want to buy a house eventually. I'm tired of renting. Still, say bookmark this video and go back to it. And then I want to just really push, because I have friends that get stuck on the whole part of like, how much can I afford? My credit score is not where it should be. I'm going to wait. Really go ahead and apply for a pre-approval. Work with a lender so you can see. Like, you may be surprised on what you think your credit score is or what you really need to get a house. So don't let doubt just take over and you keep putting something off over and over again. So that's one of my final thoughts. Did you have anything else you wanted to close out with?
No, I don't have anything.
So I just want to say that you can catch Rochelle here. Text her if you have any questions after you watch this. You didn't have any now, but you're like, oh, I do have some questions, or provide her number to anyone that you know that's in the market for a house. I also want to remind everybody that we are still on the 10K, the mission 10K with Amina, which has been on the screen throughout this live. Financial Garden's mission to financially educate 10,000 kids about entrepreneurship. So you can head over to financialgarden.com and purchase a book and plant a financial seed in the life of one of your little ones. And I want to just thank you again, Rochelle, for coming on. And I will see you all next Thursday. Bye.
Bye. Thanks for having me.